Payments Podcast from Bottomline Technologies.
Greetings and welcome to the Payments Podcast. My name is John Gaffney. I'll be your host for today's episode that will cover real-time payments. But before you tune out and say, I've heard enough about this topic, I would suggest you haven't. I would suggest you've never heard real-time payments discussed in a truly global perspective. From the financial hubs of Wall Street, to Shanghai, to Canary Wharf, to the boulevards of Europe and the boondocks of Australia and Africa, the world of real-time payments is undergoing a rapid transformation. The US has just launched the FedNow Faster Payments platform. The EU is preparing a set of substantial regulations aimed at accelerating the pace of instant payments. And Great Britain is working on its new payments architecture initiative, which will be real-time driven. A lot of change in a short period of time. And here to give us a global perspective on real-time payments and some other issues, we have a very special guest today. Leo Lipis is the founder of Lipis Advisors. He's based in Berlin and has over 25 years of experience in payment systems consulting and research on all 6 continents. Prior to founding Lipis in 2007, he held positions in payment strategy and analysis with commercial banks, clearinghouses, and central banks. Welcome, Leo.
Thank you. Pleasure to be here.
Yes, it's a pleasure to have you. Let's dive right in here. You know, I listed some of the major real-time payment initiatives, but there's a lot I didn't mention. I didn't mention New Zealand's direct payment link, India's unified payments interface. So my question to you, there's a lot going on here globally. Is there any rhyme or reason to all this change happening in so many places at the same time?
Yes and no. So it's a long-term trend, I think, in payments. Real-time payments has been a long time coming. You know, you can trace their heritage all the way back to the 1970s if you really want to. But when you think about modern real-time systems, they arose, roughly 20 years ago, in the mid 2000s. Some of the first ones were in places like South Africa around 2004. The UK launched its faster payment system, and a little bit later in the same decade. So these systems have been around for a while. What's really and when you count them up, there are about 60 of them around the world now, and the vast majority of those have gone live in the last 10 years. And there are a number of drivers that have been pushing us as a society and us as a payments industry in that direction. Some of it is the always on kind of mentality, the always working mentality that we have, and that's developed very strongly over the last 20 years. But it's also a matter of the email takes a few seconds to be delivered. A text message takes a few seconds to be delivered. We're used to instant communication. We're used to having instant results and instant gratification, and payments has proven to be no exception to that. So there's that. Okay, on the technological and social side of things, there's also a number of political drivers behind this, where now that the technology is available to do it, politicians have increasingly taken note of that. Taken note of these developments in certain parts of the world, and have been pushing things forward, and regulators have been pushing things forward, all in the interest, I think, or generally speaking, in the interest of consumer protection, of improving the user experience, and other similar goals. So there are a number of drivers that sit behind this. However, when you look at the details of a lot of these systems, a lot of them actually work quite differently from each other. I think when I first started studying payment systems, 25, 30 years ago, and then when I founded my company about 15 years ago, I thought I was going to happen upon, the ideal design for a payment system. But what you realize when you start looking at the way in which payment systems have developed all over the world is that each one of them develops within its own political environment, within its own economic environment, its own social environment, its own technological environment. People are starting in different places. Countries have different priorities for their own development, and the payment system is shaped according to those goals and according to the environment in which it develops. So, on the one hand, there is a rhyme or reason. Yeah, to get back directly to your question, there is a rhyme or reason. Our expectations are evolving as consumers, as businesses, and payment systems are developing. Or being developed, I should say, to respond to those changing expectations. At the same time, however, they're developing in different ways and developing different types of services based upon the environments in which they operate.
Now, one of those different ways is going to be in the EU. You wrote a great article early this year about EU regulations, which will be significant. By way of background, just let me point out what the four regulations in motion are. The first one is that all payment service providers that already offer credit transfers in euros need to offer instant payments in euros. Two, user fees for instant payments should be equal to or less than standard credit transfers. Three, all PSPs should provide a confirmation of payee like name checking service. And four, all PSPs should conduct daily checks of their clients against EU sanction lists. So, Leo, two-part question. Any intel about the timing of these regulations? And two, do you think they'll be effective in accelerating instant payments on the continent?
Very interesting question. So in terms of the timing, the regulation you're referring to, which has these four different parts, is expected to be passed by the European Commission this year. So the word on the street has been October, November, and it will take effect 1 year later. So call it Q4 2024. So that anybody who is currently offering credit transfers needs to be prepared to offer credit transfer, instant payments and instant credit transfers by the end of next year. The pricing regulation would take place at the same time, or take effect at the same time, as well as the other services. Of those, the most difficult to offer in such a short period of time is probably the confirmation of payee service at a pan-European level. Right now, within Europe, we do have national solutions for dealing with confirmation of payee in some countries. In other countries, and there's also in other countries, there either are limited solutions or partial solutions, or in some cases there are none. But actually harmonizing that into a single European system that's interoperable across the EU, I think will be quite challenging. Now, the second part of your question is whether or not this will increase reachability whether or not this will increase adoption. We've done a number of studies about what it is that drives instant payment adoption around the world. And this actually sort of pulls two important levers. One is availability and reachability, right? So if I want to send an instant payment, I need to know that the receiver can receive the instant payment. Otherwise, I'm not going to bother, right? I know that the way in which, for example, my bank in Germany deals with that now is that when I enter the IBAN, so the account number of the recipient, right, it automatically checks a list that says, is this bank reachable or not? And then it highlights a radio button in my app that I can then flip it to an instant payment if I want to. Now that's one way of dealing with it, but half the time I don't really look, right? So but if it simply is available and things are being sent by default as an instant payment, that would be a whole lot better. A whole lot easier, and certainly would drive adoption. And that's one of the things we see, incidentally, is that when there's a certain threshold of reachability, that's somewhere around 92-93% of bank accounts, that when that many bank accounts are reachable using instant payment, that's when adoption seems to take off. The second lever that's being pulled here is on pricing. So I mentioned that, my bank here in Germany, right? It gives me the option of sending a real-time payment, but right now they still charge me extra for it. They consider it to be a premium service. And there's a very clear correlation, across many different countries between pricing and adoption of a payment service. That as soon as you charge the user more for a particular service, that demand is very elastic. And in fact, the more you charge for it, the lower adoption tends to be. So they're pulling two important levers here, to drive adoption. The other two, I think, won't have quite as big an impact. The sanction screening matter is really an operational matter for the banks. It lowers their cost. It makes it so that instant payments can be done more efficiently, and perhaps even faster than they are today. But it's more of an operational issue for the banks involved. And then last but not least, the confirmation of payee service, again, helpful, but largely a fraud prevention measure, rather than one that's going to drive adoption in its own right. So that's my reading of the situation. There is for the record, just to be, there's another proposed important regulation called the PSD3, the Payment Services Directive, the third iteration of that. We had our first one back in the late 2000s, a second iteration around 2015, 16, if I recall correctly. And this is the third one, which is really being intending to drive more innovation and competition into the payments market in Europe by giving non-banks more leeway to offer payment services directly to consumers, to access bank accounts using open banking, and so on and so forth. This is what the previous payment services directives have been aimed at, and what the next one will be doing as well. Now, that's a slightly different beast. It probably won't be approved by the European Parliament until next year at the earliest. And then, because of the nature of European law and European legislative process, that is a directive rather than a regulation, which means that then needs to be transposed into national law across all the member states of the EU, which inevitably takes longer and makes the process more complicated. So that I don't think that new directive, the Payment Services Directive 3, won't take effect before 2026 at the earliest.
Okay, interesting. Nothing easy, right? So one of the things I know that you're kind of excited about is some of the value-added services that ride along with real-time payments. Can you run a couple of those down for us and tell us why they're going to be important?
Sure. So probably the most important one that we see across a number of different countries is what we call a proxy service, or a way of linking together a proxy, like a telephone number or an email address, to an underlying bank account and sort code, a routing number. So a number of countries have this. In the U.S., you have it with Zelle. In France, it's called Paylib. In the Netherlands, it's Tiki. And so on and so on. There are a lot of them all over the world. In South Africa, it's PayShop, and so on and so forth. There are lots of them all over the world. And what they really do is they promote P2P payments, so person-to-person payments. So that if I, for example, want to pay a micro business, or you and I go out for lunch, we want to split the bill, is another classic example. I want to pay my babysitter. I want to pay my lawn service. I want to pay, whatever, typically a low value payment. I don't necessarily have a person's bank account number, and they may not even want to give it to me, but I probably have their phone number, even of casual acquaintances. We're used to giving our phone numbers to strangers. We're not used to giving people our bank account numbers. So therefore, what can be offered is a proxy service, okay, and that tends to really drive adoption of P2P payments nicely. We've seen a number of other overlay services develop, in particular in countries like India, like Brazil, where they've combined the real-time payment service with an open banking layer, so that non-banks and third parties can develop payment services over the top of that. And what we've seen, for example, within India, and one interesting example has been a remittance service mostly for domestic remittances, but there are even some that are aimed at Indian expats who live and work abroad who need to send money back to their families. And so that's being done through the Indian instant payment system, which is really cool. We also have other interesting overlay services that are aimed, for example, at point of sale payments, where for example, you've integrated a QR code at the point of sale into the instant payment system, so that a payment can be made directly from the user's bank account to the merchant's bank account. And so it's an entirely different model for how a point of sale payment could be made, and so on. So these are, I think, some of the more interesting ones that are coming up. And there are lots of others. I mean, the list is really, really long.
Well, I'm glad you went through the ones that you went through. That was enlightening. Thank you. I know you guys do some great research at Lipis Advisors. We recently wrapped our flagship research initiative, which is called the Business Payments Barometer, and it had some interesting findings in it. One of them, Great Britain being well ahead of the curve when it comes to corporate instant payments. In fact, if the large enterprises keep their promise, according to the barometer, we could see 91% coverage in the next year or two in Great Britain. In the US, it looks like an average of about 66% usage. But the issue here, I think, is B2B payments. In your opinion, what's it going to take to get some critical mass for real-time rails for B2B payments?
Well, I think there are two different issues that we need to separate here. One is on the accounts payable side. The other one's on the accounts receivable side. So on the payable side of things, right, for B2B payments, probably the most important thing is integration with ERP and accounting software vendors. The way these things work now is that an accounts payable entry will have to go through multiple approvals, and then the payment software, right, or the payment management software or the ERP software dumps it all into a file, and that gets sent off to a bank, right? And that may happen once a day, maybe once an hour, if it's more frequent, but it's a periodic process. But in order to send a real-time payment, right, it's got to be communicating in real time. So you almost need an API layer at the bank for allowing a corporate customer to initiate payments. It could also be message-based, but it has to be integrated, okay, in a way that it's not today. Right now, these are file-based systems, okay, typically, that are sometimes even running in batch processes. I mean, the ERP system, not the payment system, although the payment system is running that way too. But typically, the payment management software is dealing with this on batches or in periodic chunks of time. So that, I think, is probably the most important thing on the payable side of things. There's a whole workflow that needs to be built around that, and workflows that need to be changed within companies to be able to manage that process. And then on the receivable side, receiving a real-time payment, again, you also need that integration layer. But perhaps more importantly, is the whole sort of internal accounting system at the corporate that needs to be revised to reflect that. So if we take a simple example of me paying, I don't know, my bill at the last minute, right? There's no sense in me paying my telephone company, right, my bill at the last minute if they can't post it to my account within the phone company in real time also. So the difference there of a payment taking a few hours or a payment going instantly needs to be reflected in the own accounting system within the company. So that's on the receivable side. So these problems typically, the way in which we've seen this happen with other payment systems, it takes simply a generational upgrade, right, for these things to happen, and it takes a few years. One of the interesting things that drove volume in the UK in the early years, right, was that they targeted these kind of B2B use cases, and the technology suppliers for the UK corporates updated their software relatively quickly to be able to do that. In larger markets, though, that gets more complicated, and again, the updates on the receivables and payable side are super important. What you could imagine easing this a little bit would be things like overlay services, right? We were talking about just before. You could link these together. We've seen some overlays in some countries that have targeted B2B payments, okay, by providing that kind of integration layer for software providers. So it's been a really cool trend that we've seen in a couple of places, but it hasn't been commonplace.
Let's talk Sibos. Starts September 18th, the gathering of the clan, the international banking clan. Yes, cross-border payments are sure to be in the spotlight. In your opinion, Leo, what are some of the obstacles that still hold back cross-border payments, even real-time cross-border payments, and how can we overcome them?
Well, I think it's another really good question. When I look at the way what's holding up cross-border payments today, and one of the things that we've seen developments over a number of years now to make cross-border payments faster, cheaper, to make cross-border payments more transparent, and so on. Initiatives like Swift GPI, Swift Go, initiatives like IXB between the clearinghouse and EBA clearing to link up their own real-time payment systems to each other. Oftentimes, what still causes delays are two major issues. One is compliance. Cross-border payments still have a much, much heavier compliance burden than domestic payments do. And retooling domestic payment systems to be able to handle the domestic leg of a cross-border payment in an automated fashion is often time-consuming. And so therefore, people have tended to fall back on tried and true methods. I see that as continuing to evolve, though. There is a significant movement toward the regionalization of payment systems more broadly. There's a significant movement toward creating linkages between national payment systems to be able to do this. We're seeing this not just with the euro and US dollar corridor. We're seeing it in Southeast Asia in ASEAN and the Asian Payments Network. We're seeing it across Southern Africa with the Southern African Development Community (SADC) and their system TCIB, and elsewhere. So those are just to name a few examples. What can slow these things down, though, are some of the economics of the systems, though. This is the second major thing. So I talk about compliance. The second major thing is the economics, and there's no doubt that there are major banks that make money out of the current system, and so by inventing new methods or by circumventing that, you're going to come up against some forces that are going to try to, how should I say, slow down that evolution, slow down that natural evolution. And so the economics of the existing system lead the players that currently control those flows to have a vested interest in maintaining that system. Now, that said, I don't believe that it's an irresistible. I do believe that it's an irresistible tide. That we're tending toward, once we get the compliance issue solved, the economic issues will soon fall. Will soon follow. And what we're going to see, though, is faster, cheaper, better cross-border services. So one that comes to mind is one of my colleagues here in Berlin grew up in the United States, and his father was sending him some money. And he used, call it a cross-border remittance service, right? That used open banking to check the balance in the father's account, so that they knew that that the person making the payment was good for the money. They then did basically an on-us transfer on their own books to their European entity, dropped it into the European real-time system, and the money was posted, in Europe within seconds. Seconds of the money being sent. That is a fantastic user experience. And my colleague tells the story that the money was posted to his account, and he was notified by his bank that the money was in his account faster than his father's voice could be transmitted over WhatsApp.
Not bad at all. So, one of the other things that will probably be discussed, to what kind of end, we're not really sure, but CBDCs will certainly be discussed at Sibos. How would you counsel banks to look at the potential for CBDCs, especially as a cross-border vehicle? Do you think they'll be a factor over the next 1 to 3 years?
So over the next 1 to 3 years, so it's interesting you put a time limitation on that. Actually makes it a lot easier to answer the question. I think the answer there is, I'm going to deal with this in two different ways. So I think that let's talk first about wholesale CBDCs. And that means using CBDCs for interbank settlement, right? Or some kind of central bank token for cross-border settlement. There, I think it may well have an important role to play. I don't believe on the retail side, I'll get there in a moment, that it will have much role to play, but I'll get there in a minute. On the wholesale side, that's largely an efficiency play. The real question is, this is not something that users are going to interact with. It's something that banks would use to settle among each others. The question is that more efficient than current methods of settlement that are being used? And that's a pure efficiency play. It's a pure business case that you make for it or you don't. So there's a pure business decision. If there's a way to save money by you doing it that way, then it will happen. The other issue is retail CBDCs. And so there, I don't believe that we're going to see much movement in the next 1 to 3, certainly not in the next 1 to 3 years. And even longer term, I think that cross-border retail CBDCs are going to, there's a long way for us to go before we get there, if we ever are going to get there. And there are a variety of reasons for that, I think. So imagine that, again, I'm paying you, my digital euros, right? And you're sitting in the United States and you receive digital euros. Well, what are you going to do with them? How are you going to hold them? How are you going to exchange them for either real euros or whatever fiat euros, or how are you going to exchange them for digital dollars? How are you going to spend them? Who's going to convert them for you? You have all these questions that need to be answered. And so using this in a cross-border environment, I think, is exceedingly difficult. Even in a domestic environment, it's difficult enough. And we see, of course, the amount of effort that the European Union and the ECB are putting into the digital euro strategy, which I do believe is going to happen here in Europe, as a way of driving additional cash out of the market. or traditional cash out of the market, as a way of driving more choice in making online payments. I can see all those arguments. I get that. But then using that in a retail environment it's not obvious to me how that's going to work. And certainly there are too many open questions, I think, for making that happen in the next 1 to 3 years.
Leo, suppose you had the closing keynote at Sibos. Give us 3 to 5 things you'd highlight in that speech.
The first one is one that I just spoke about. I'd say it's CBDCs. We need to watch the space carefully, because if it's done poorly, if CBDCs are done poorly, they really have the potential to undermine the payments industry. But if they're done well, right, they can prove to be a real complement. A real complement, I think, to the choices that are available for consumers, the choices that are available for businesses, and ultimately, again, if done well, could provide new sources of revenue for lots of players around the industry. So there, I think, is one key trend to watch. And of course, it's been one of the hottest topics over the last year or two, and I think it will continue to be an important topic over the next year or two. The next thing I'd say is fraud is another key thing to watch. I hope you'll forgive me for not having this structured as if it were a keynote at Sibos, but rather it's right now it feels like it's a few random thoughts that ultimately would be structured very well for a nice keynote. But I think fraud is also a really great topic. So in the same way that we've all seen, tools like ChatGPT in the news over the last few months, fraudsters have been seeing that too, and you can bet that they've started using it too. I've noticed it in my own inbox, right? That I'm now getting spam that I can tell has been written by an artificial intelligence bot. And in fact, recently at a conference, I helped prepare a talk for one of my colleagues. We actually had we played around with some of these AI tools online, and we actually had I fed it one of these classic Bitcoin scam emails that we all get, right? And I had it rewrite it in the style of David Attenborough talking, and then I took that text and fed it into a second AI bot, okay, which then read it to me using David Attenborough's voice, okay. So it was incredibly realistic, right? So I had David Attenborough trying to convince people to, buy Bitcoins through a particular app, okay? That was probably a scam. I never tried it. But the point is that if you can do this with, David Attenborough's voice today, somebody might take this recording of this podcast and use it to analyze my voice, and then call my wife or my mother or, and have me asking them to send money, right? And it's going to sound just like me, and it's going to talk just like me. It's going to have the same cadence that my voice has. It's going to use the same vocabulary that I typically use when I talk. And so, in the same way that we have been learning to use these AI bots, fraudsters are too. And so, over time, I believe that preventing fraud is going to become more challenging. It's going to have to rely upon some of these tools as well, artificial intelligence, machine learning, and so on and so forth. But I think that's one of the key things that's coming up, both as a political and economic topic in payments over the next few years. Last but not least, I guess the third major thing I would mention are just the competitive pressures in this industry are unrelenting. One of the major trends over the last 10 years has been the entrance of non-banks into the payments value chain, and I think that will continue. In fact, I know it will continue. In fact, it's being encouraged by politicians in multiple countries, and it's bringing a number of benefits as well. Competition in and of itself is a good thing. It promotes innovation, it promotes efficiency, it promotes a better experience for users, whether corporates or consumers. And in order for us to respond to those pressures, right, as an industry, we need to push ourselves even further. And I see that happening. And it's one of the things that makes me really proud to be a part of this industry and to work with so many great people, is that people care about what they do, and they're often interested, or almost all of them are interested in pushing the envelope further out.
What a perfect ending. Thank you so much. That was great. That's going to be a wrap for this episode of the Payments Podcast. Our topic has been a global view of real-time payments, and our guest has been Leo Lipis, founder of Lipis Advisors. Leo, it has been a pleasure. Thank you very much.
Thanks for having me. I've enjoyed it.
Join us next time wherever you get your podcasts. We're on Spotify, Apple, and SoundCloud. See you next time.
Payments Podcast from Bottom Line Technologies.